Hi friends, this is Kishore. Welcome back to my channel. Today I'm going to do the real estate data analysis. I'm going to connect the dots, and after connecting the dots, are we going to see a monster that is coming to us, or are we going to see a beautiful angel? Hope you like this video. Let's jump into the show. This is the first chart. It is talks about the supply in the market. So the supply is increased compared to the from the March to April. That is a very good sign for the buyers. And how the mortgage rates are doing. The mortgage rates are rising to the 7% this week, which is it made the costlier to buy a home. And if I see the home prices year to year percentage change, 12-month change, the home prices has came down a lot. It's fall from a cliff. So how the affordability index is doing? Like affordability index is still under 100, means even though the prices came down a lot, still the home prices are not affordable to like before. So the first thing is to look at is the liquidity. The liquidity, global liquidity is still under 20, which means there is a huge chance of a credit crunch. That is what we are seeing here in the senior loan officers, commercial and industrial loans chart. This is showing the credit crunch in that loans. And also this chart talks about mortgage borrowing. So the mortgage borrowing came down from from 1150 to 550 around. So which means the banks tighten the standards, so they are not sanctioning the loans as they did before. And this is talks about rent versus buying a home. So right now per month, if the on an average the rent is 1850, whereas the buying a home on an average cost like 2700. There's a huge gap between the buying and renting. So when there is a huge gap is like that, people choose to go rent. So how do we confirm that? So this chart talks about only there are only four states where there is buying is cheaper than rent, and those four states are Detroit, Houston, Philadelphia, and Cleveland. Rest of all states are renting is cheaper than the buying. So when renting is cheaper than buying, how the realtors growth is, like are they growing, are they cutting down the realtors agents in the realtors market? So this chart tells clearly it is the number of realtors are cutting down, and it is as low as near 2008 and 2009. So and this is very critical data. Home Depot, they released the results last week, and they cut down their forecast for this year, and also they missed the revenue. This happened in first time in last 20 years. And also today Lowe's, they cut down the forecast of the for this year guidance, which means home improvements in general. Whenever there is a people buy the home, they'll do the home improvements, and the existing home or a new home, they do some improvements in their home. So the improvements are cutting down. So when I look at the lumber chart right now, it is at 465 the price is, but there is a clearly negative divergence in the CCI indicator. I circled in the red color. That shows that there is a near term the price is going down, which is happened in the past also. Similarly, I looked into the real estate ETF, IYR. So this is also the same. There is a negative divergence in the CCI. So I'm expecting a small price down in the IYR. So this is the chart talks about the copper. Copper is one of the main indicator I look at when I want to know how the economy is doing. So the right now the copper is going down. Right now it is at the support level, but I'm expecting if the support line breaks, it can go little low. So, and this one talks about how the institutions are doing in the market, in the equity market. Are they buying? Are they selling? So, from May 2022 the till date, they are selling huge. They are not buying anything in the stock market. Why? Are they expecting any recession, or why they are selling? Last week, we got an US Empire Manufacturing Index. It came down minus 31.8, whereas the expected estimated is minus 3.9, which means the manufacturing index is very low. So it tells like the recession is very near. This is the one of the key indicator to know the where the recession is, how far the recession is. And this is also very interesting data. I found it like property and casualty industry, they posted a huge loss. There are a very huge underwriting loss, and it happened first time in the last 12 years. So after looking all this data, so the real estate still is under pressure, under stress. It's unlikely to go up, the prices of the homes, because the mortgage rates are going up, and also when there is a debt ceiling, there is a chance of prices can go up, interest rates can go up. So this is all for today. Hope you like this video. If you like this video, please hit the like button. And if any of your friends looking at the similar kind of content, please share it and subscribe to my channel. And please hit the bell icon so that you know whenever I release a new content into the YouTube. Thank you so much. Bye bye.